On March 12th, 2020, Bitcoin lost around 50% of its value in a single day. Traditional markets also took a massive hit as the coronavirus fears continue to create uncertainty and spook investors. Bitcoin falling further and going to zero is a real concern for some, especially if you're new to the ecosystem. You might be surprised if I said Bitcoin has had 13 horrific crashes, each more steep than the latest dip from March 12, 2020. And guess what? Bitcoin has recovered every time. Bitcoin has also been declared dead numerous times since its inception. And guess what? Bitcoin's still here and will continue to be because it is the answer to the monetary mismanagement of central banks and governments. We at Exodus really believe this, and it's why we do what we do. We keep building during the low times. We're going to take a look back at the 5 biggest crashes in Bitcoin short history and what caused them. Hopefully, this will give you some peace of mind and change your perspective from the narrative of volatility that permeates the news.
Number 5, August 2012, negative 56.7%.
We're going to jump into the Wayback Machine. In the summer of 2012, Bitcoin Savings and Trust, which was a Ponzi scheme promising large weekly payouts to investors, stopped its payouts. Bitcoin Savings and Trust operator Trendon Shavers eventually went to jail for his activities. The BTC price gained almost 20% in 2 days, topping out at $16.41 on August 16, 2012, losing all the gains and bottoming out at just $7.10 3 days later. The price sounds low, but percentage-wise, this was a big move. Of course, the market cap during that time was under $100 million. The silver lining here is Bitcoin has proved to be resilient in the face of market corrections year over year.
Number 4, in the most recent, December 2017 to December 2018, where the market took an 83% hit.
Bitcoin dipped from its all-time high in December 2017 when it touched the $20,000 threshold to settle into a bear market at around $3,500 USD. What caused this? Some would say it was the 2017 ICO boom, or it could have been the first dApp released in November on the Ethereum network, or, more plausible, market manipulation. Personally, I would say there's not a single source. However, the year leading up to the all-time high and the following bursting of the bubble was a wild ride from about $1,000 in January of 2017 to $20,000 in December. And it could have just been the speculation of big payouts and FOMO that brought many new people into crypto. So many, in fact, that it significantly slowed confirmations on the Bitcoin network and increased transaction fees because of the congestion. The aftermath and decline in value was due to plain old market forces and possibly additional legislation in 2018, which determined most of those ICOs from 2017 were actually classified as securities. The silver lining in this example here is for the long-term holders. The price of BTC settled 3 times higher than the previous year's low.
Number 3, December 2013 to January 2015, with an 84.6% decline in the market.
4 years earlier, Bitcoin broke its previous all-time high of $260. This caused a parabolic rise of 500%, peaking around $1,150 in early December 2013. Of course, a parabolic shift in any market isn't sustainable for the long term. And as the price started correcting downward, then came Mt. Gox, which at the time is the world's largest Bitcoin exchange. They started halting withdrawals, and then they filed for bankruptcy a couple of weeks later. No, most Bitcoiners at that time had funds stored on Mt. Gox, and it's estimated that about 850 million BTC were lost, and the price in January of 2015 bottomed out at around $170. The silver lining here? BTC recovered during 2015 and ended the year at around $460.
Number 2, April 2013, negative 87%.
Again, we see familiar forces at play here. A parabolic rise followed by Mt. Gox. This historic 87% loss started with a significant dip on April 10th, 2013, when the price of Bitcoin dropped 52% in 6 hours. Obviously, there was panic selling, and Mt. Gox, which was handling about 70% of all transactions on the Bitcoin network, just couldn't keep up with the trading demand and caused an even greater dip. This was an early red flag about the risk associated with keeping your funds on a custodial exchange. And coming in
At number 1, June to November 2011, a negative 93% drop.
this was the first major crash in the price of Bitcoin. This 3-year-old technology's value rose quickly to $29 and then lost almost all of its value, declining to $2 over the next few months. The major reason for this epic crash was the hacking of, again, Mt. Gox, the dominant centralized crypto exchange in Bitcoin's early days. A hacker gained access to Mt. Gox user accounts and was able to falsely crash Bitcoin's price to 1 cent. Although this crash wasn't real, it was a huge blow to Bitcoin and the broader ecosystem in its early days. Again, the centralized point of failure here was Mt. Gox, and again, an early red flag for keeping funds on centralized exchanges. As you can see, Bitcoin crash history tells us that crashes in the Bitcoin price, including extremely drastic ones, are nothing new. It's not a stretch to say that we can expect to see more in the future as this asset continues to mature. Nevertheless, through all its ups and downs, the US stock market is still here. And likewise, throughout its more than 10-year history, Bitcoin has yet to be wiped out, despite the hundreds of times that it's been called dead, which comes mostly from people who have a vested interest in seeing it fail, like the traditional financial system. So why is this? Because Bitcoin is a threat to the traditional systems, which are based on nothing more than policy invented by a few wealthy individuals to protect their own and control everyone else's wealth. Bitcoin was created by Satoshi Nakamoto as a solution for when the outdated monetary system fails. The governments of the world use their power for printing money to pay for things that they can't afford. What's behind this unending increase in the amount of fiat currency? Nothing. If everyone right now went to a bank to withdraw all of their funds or cash in all of their investments, that would find the complete collapse of the economy. Bitcoin is protected from this collapse by a fixed cap of how many Bitcoin will ever be mined, which is 21 million. This means that Bitcoin has built-in scarcity and will continue to increase in value as time goes on. We'll see more volatility in the future and possible crashes. It's kind of unavoidable. However, as the previous references allude to, as Bitcoin matures, it becomes less volatile and a more secure store of value. Let us know what you think about the future of Bitcoin, and if you have a story from one of the major crashes in the past, please share in the comments below. And be sure to like this video and subscribe to the channel on your way there. Hodl on!